everyone, my name is Sarah and I'm one of the lead activists with the Columbia Democrats, and today we are going to discuss a very exciting topic. The fact that it's Lindsey Graham's birthday today. No, I'm totally kidding. That's not what we're discussing. We're going to talk about something that's very near and dear to my heart, which is the federal student loan crisis. Now, people are having some misconceptions about what's actually going on in Congress and what's happening, and I'm here to clarify for you and figure out the different steps of action that are being taken and what should be taken. So, here we go. So when students receive loans from the federal government, they most commonly receive loans called Stafford student loans. And there are two types of Stafford student loans. There are subsidized Stafford student loans, which are basically only given to students in the lowest economic brackets. These loans have a lower interest rate. Currently, that interest rate as of June 30th is 3.4%, and the loans are capped, so students can only receive a certain amount of those loans. The other type of Stafford loan is an unsubsidized Stafford student loan, and those are given to everyone else who needs a loan, or if you receive subsidized loans but you need more, you are given unsubsidized. Typically, that interest rate as of June 30th is 6.8%, so it's double the rate of the subsidized loans. Now, these rates, the 3.4 and the 6.8 for the subsidized and unsubsidized respectively, were established in 2007 in a bipartisan effort to lower the cost of college for students in order for them to make education more affordable for students. However, due to budget cuts, as we have seen, and all kinds of, I have no idea, the interest rates were going to have to rise due to these cuts. And so there's been a lot of, in Congress, there's been a lot of attempts to try and make sure that that doesn't happen and trying to delay this eventual raise that is going to happen. So in the latest being in 2012, when both President Obama and presidential candidate Mitt Romney both campaigned on the fact that the interest rates on these loans had to stay the same. So basically Congress was able to come up with a compromise in that the rates would stay the same until July 1st, 2013. After that date, the unsubsidized rate would raise to 6.8%, and that was very troubling for a lot of families who obviously can't afford to pay for college with the interest rate that high and pay back their loans, and it's very, very troubling about that fact. So the question is what people in Congress are doing about this, because obviously we want to make sure that everyone has an equal opportunity to go to a secondary education institution and achieve getting a bachelor's degree, a master's degree, whatever they need. So there are basically three schools of thought on this. So the first school of thought is our best friends, the House Republicans. And what the House Republicans want to do is they want the interest rate of the loan, so that number, that 6.8, 3.4, they want that number to be related to a 10-year Treasury interest rate, basically the rate on Treasury bonds every 10 years, plus a couple percentage points here or there. That seems like a good idea, but it's really not, because there are three things that make me really nervous about this plan. The first is that the rate would be variable for the life of the loan. Basically what that means is every year that you have the loan, the rate changes. So one year you could be paying 2%, one year you could be paying 4%. And it's all dependent on what this 10-year Treasury interest rate is. Why that's concerning is because it would be difficult for families to be able to pay off their loan if they don't know what the rate is, and it would make people more nervous to take on a loan like that. And it basically defeats the purpose of helping people pay for college. And the projected 10-year interest rates are expected to rise. So that's very, very troubling, in that probably most people would not be able to afford to pay off their loans if they could. The second thing is that the money that they haven't told us where the money that they're earning from these interest rates would be going, which is a bit of a concern because it's basically profit for the federal government, and with the House Republicans, who knows where that money is going to end up. And so clarifying that would be really great, but in their bill they currently don't do that. The third thing that they would do is that they would remove the distinction between subsidized and unsubsidized loans. So basically everyone would be paying the same percentage, the same interest rate on their loans. Why that's concerning is that people who are in the lowest economic brackets are not getting the help that they need in order to pay for college. The people who are the most disadvantaged and who need college education the most to raise to the middle class. And that's very, very concerning, and I just would hope that that would have been addressed, but it's not. Now, the second plan is the Obama plan, and so Obama's plan is pretty similar to the House Republicans' plan. He still wants interest rates to be related to the 10-year Treasury interest rate. And there are some fluctuations as to the percentage points that would be added onto that rate. They're typically a lot lower than the Republicans' rate, but it's generally the same idea. What's different about the Obama plan is that the rate would stay the same over the life of the loan. So every year, if at the beginning of your loan, if your rate is 2%, you would pay 2% for the entire life of the loan. And that's really great because then families can predict what they're going to have to pay, and they know and they feel comfortable with the fact that they are going to pay the same amount over the life of the loan. The second thing is that it would keep the distinction between subsidized and non-subsidized student loans. So the subsidized student loan would have less percentage points added onto that 10-year Treasury interest rate, which would make it a lot easier for people from lower economic brackets to pay for college. The third thing is it distinguishes where the money is going that is being raised by these interest rates that people are paying. Obama's plan currently would put that money towards Pell Grants, which are basically big pools of money that are given to the lowest people who are in the lowest economic brackets, who really, really need money and probably wouldn't be able to afford college even with a subsidized Stafford student loan. So that's really great because we know that the money is actually going to people to help pay for their college. Now, the third school of thought is that we shouldn't do anything at all, and that we should just try and keep the system the way it was. Basically, take the rate of 3.4% and put it into the subsidized loans, keep the unsubsidized rate at 6.8, and just leave it alone, and just work on it later. But what's really concerning about that is that this isn't sustainable in the long run. It'll probably end up hurting us in the long run because the government is losing a lot of money on this and is spending a lot of money on this concept. So if we want comprehensive long-term reform, the time to act would be now because we are in a situation where we are being pressured by society and by the government to have these reforms. And I think that honestly, we should enact the Obama plan just because, this is my own personal opinion, but I think that we should enact the Obama plan because it makes sense and it addresses the issues that we need. So that's all you need to know about student loans. I can't wait to see y'all this summer, and have a good day. All right, love you all. Liberal love. Bye.